U.S. trading partners are readying a response to President Trump's recent barrage of tariff threats, including a potential 30% levies against the EU and Mexico announced over the weekend. In a piece for the publication Foreign Affairs, Queens College Cambridge President Mohamed El-Erian wrote that the U.S. has, quote, shaken the very foundations of the global order, adding that there is no trusted conductor to guide countries and companies through the complicated transition to whatever's coming next. Joining me now is Mohamed El-Erian. Always a pleasure to talk to you, Mohamed, and thanks for being here, obviously, in what continues to be a very tricky time here. So I guess I would ask first whether you think we are witnessing a sort of remaking of the global order. It seems like there have been so many fits and starts. It's difficult to get that big picture.
So I think that we are no longer in a world of uber globalization, where we're looking for ever closer integration of goods and people and flows. The question is, are we in a world in which there is managed globalization light or total fragmentation? That's the question mark. And we're not going to know this for another few years, I think, Julie.
And I thought the other thing that was very interesting that you wrote in your piece is that the U.S. is almost behaving like a developing nation rather than its sort of global dominant status. What do you mean by that, and what are the implications of that?
So we're seeing market correlations that normally are more common to developing countries than the U.S. For example, the currency weakens even though yields are going up. That shouldn't happen. The negative correlations between bonds and equities has broken down. So you're starting to see things, and you're starting to hear narratives that are more common in developing countries than in the US. And I think that that's partially because the US is trying to remake its domestic system. There's a real question mark as to whether this is a Reagan moment in which the US changes things with a view to a better outcome, or is this a Jimmy Carter moment in which the U.S. ends up in stagflation and ultimately recession?
Which do you think it is, Mohamed? Or if we don't yet know, how will we start to know?
So first, let me tell you, the market is all over the place on this. We started the year with an 80% probability that this was a Reagan moment. By the beginning of April, we were below 50%. And now we're somewhere around 70%. So we have fluctuated a lot. And that is unusual for the US with its mature institutions and big diversified economy. I think it's a 50-50. I don't think we know. I think it will depend on how other countries react as well. So it's a 50-50, but the marketplace right now seems more comfortable than I would be with where we're going.
Well, I wanted to ask you about that, because what do you make of the extreme equity resilience here in the U.S. in the face of all of this back and forth?
So I think there's two things going on. One has to do with the view that corporates aren't the sovereign, that you may have issues with the sovereign, but at the end of the day, U.S. corporates are strong, good balance sheets, good innovations. That's one view. The other view is that people ultimately think that the US is escalating to de-escalate. That what we heard over the weekend against the European Union, against Mexico, is negotiation. And come August 1st, one of two things are going to happen. Either we're going to push the deadline out yet again, or the US will get what it wants from its trading partners. So the markets are pretty relaxed about this. More relaxed than I would be, but I understand that is the trade that has worked over and over again, and you don't want to get in the way of something that's been working.